Everyone tells you to buy in the major hubs. The safe bets. But here is the truth. The real wealth isn't being built in the skyscrapers anymore. It's happening in 5 undervalued, mid-sized cities that most investors are completely ignoring. And the experts are wrong about why. We didn't just guess. We analyzed thousands of corporate relocation, data points, and workforce migration trends heading into 2026. We've spent years tracking where the high-paying jobs are actually moving, not where the news says they are. Today, I'm revealing the 2026 migration map. I'll give you the 5 specific cities set to explode, the exact corporate drivers fueling the growth, and the strategy to acquire properties before the price surge hits. If you want high-yield passive income without the big city headache, this is your roadmap. Most gurus tell you to stick to the safe bets, the big hubs, the coastal giants. They say the demand is guaranteed, but they aren't showing you the math. Look at the price-to-rent ratios in these cities. It's a nightmare. You're putting down a massive down payment, hundreds of thousands of dollars, just to make a few $100 a month. That's not investing. That's a glorified savings account with a massive headache attached. And it gets worse. The corporate landscape is shifting. The big city monopoly is breaking. Companies aren't just allowing remote work anymore. They're physically relocating their headquarters to lean, mid-sized hubs. If you buy into a saturated hub now, you're fighting for scraps in a market that's already peaked. You're betting on a 2010 playbook in a 2026 economy. While you're struggling with rent control laws and skyrocketing property taxes, the high net worth players are quietly moving their capital. They aren't looking for safe. They're looking for growth. And if you keep following the herd, you'll be the one holding the bag when the migration is complete. Here is the truth. The biggest mistake investors make is buying where the growth already happened. By the time a city is trending on news sites, the cap rates are crushed and the margins are gone. To find the real gold, you have to stop looking at real estate data and start looking at corporate relocation data. When a Fortune 500 company moves 5,000 employees to a mid-sized city, they aren't just bringing salaries. They're bringing a massive surge in rental demand. Let's dive into the 2026 migration map. These are the 5 undervalued cities set to explode. Number 1, Columbus, Ohio. While everyone looks at Austin, smart money is moving to Columbus. Why? The Intel chip plant. This is one of the largest tech investments in U.S. history. We're talking billions of dollars in infrastructure and thousands of high-paying engineering jobs. This creates a massive vacuum for high-end rental housing. Number 2, Huntsville, Alabama. They call it the Rocket City for a reason. Huntsville has one of the highest concentrations of engineers per capita in the country. The gap between local wages and housing costs is wide open. That is where your cash flow lives. Number 3, Greenville, South Carolina. Greenville is the manufacturing darling of the South. Between the BMW effect and a growing biotech sector, the population is surging. It's a perfect blend of stability and growth. Number 4, Indianapolis, Indiana. Indy is the crossroads of America. With the explosion of e-commerce, logistics and warehousing are booming here. This isn't just about industrial real estate. It's about the thousands of workers who need a place to live near these hubs. And number 5, San Antonio, Texas. While Dallas and Austin are becoming overpriced, San Antonio remains the diversified powerhouse. Military stability combined with a massive healthcare expansion makes this a low-risk, high-reward play for 2026. Now you can't just guess which street to buy on. This is where I use PropStream. I filter for distressed properties in these specific zip codes to find off-market deals before they hit the MLS. Once I find a lead, I don't trust my gut. I run every single number through Deal Check. If the math doesn't work in Deal Check, the deal doesn't exist. That is how you build a portfolio that survives any market crash. Now, you might be wondering how to find these hidden gems yourself. You can't do it with a basic Zillow search. That's why I use PropStream. It gives you the deep dive data on corporate shifts and distressed properties before they ever hit the open market. But finding a lead is only half the battle. You need to know if the numbers actually work. That's where Deal Check comes in. It strips away the emotion and tells you exactly what your monthly cash flow will be. Now look, not everyone wants to be a landlord. If you want the gains of these growing markets without the 2 a.m. plumbing calls, check out Fundrise. It's the fastest way to get passive exposure to institutional-grade real estate. All 3 tools are linked in the description below. Stop guessing and start using data. Grab those tools, and I'll see you in the next video.